Amit says, hi, Robert and Austin. First up, I must congratulate you guys on an awesome job. You folks have been the single biggest impact on my finances, and the future of my family will enjoy everything because of this podcast. What an awesome message from Amit. Thank you so much for saying that. Amit says, my name's Amit. I'm 52 years old, married, and I have 2 teenage kids, and I moved residence to the United States 2 years ago from another country, and I discovered you guys about 6 months ago. I have a portfolio of $4 million invested in the stock market, and we make about $400,000 per year. My challenge is that 90% of my $4 million is invested into a single stock, which has done very well over the last 8 to 10 years, and I've just never touched it. Almost 60% of that $4 million is due to capital gain appreciation. After listening to you guys, I'm now ready to diversify, build my base, and use all the good tips I've learned from you. So my question is this. I want to diversify 2 million of this 4 million away from this single stock. So should I bite the bullet and do all 2 million at once? Or do I sell 500,000 a year for the next 4 years, or maybe something different? I want to make sure I'm taking taxes into account when I figure out the strategy. What do you recommend? Robert, you want to kick this one off?
Yeah, this is a tough one because part of me says there's no time better than now to start investing and moving some of this money around. But first, I want to back up a little bit and talk about how important it is to diversify. Because when 90% of your net worth is in one stock, you're one day, one bad report, one scandal away from losing most of your, portfolio worth. And that's scary to me. In my opinion, you should have diversified a long time ago out of it. I know it's been making money, so it's great. But let's get this handled as soon as possible. So what would I do? I would probably bite the bullet. I'd probably pull the 2 million, take the tax hit now of whatever you have to do, and get that money moved and diversified elsewhere. I like the idea of dollar cost averaging and doing 500,000 at a time. But the other issue is then you're still opening yourself up to the fact that one scandal or one issue with that company could wipe you out, and then you wouldn't even have the $4 million to work with. So I would look at it that, yes, you're going to pay some taxes, but having that diversity is going to let you sleep at night a lot better and also put you in a position where you can really set yourself up for your children. You mentioned 2 teenage children. That's very important because right now I don't hear anything about 529 plans. I don't hear anything about you having custodial Roth IRAs for the kids. You're not diversified enough to where I would feel safe at night, and that's why I would do it right away.
I completely agree, Robert. So now let's put some numbers around it. So if you are taking home $600,051 or more married as a married couple, then you will owe 20% on this long-term capital gain that you have alluded to. So let's break that down. You're taking home 400,000 right now, which means for you to take advantage of a 15% capital gain because you wanted to keep taxes in consideration of selling this, you would have to only cash out $200,000 of this or less, which will be another 10-year period of time before you can completely diversify away. If you wanted to do some of that, I'm not mad at it, but I completely agree with Robert. It is so important to diversify your money out of a single stock. You have $3.6 million in a single stock, which, to your point, probably has done pretty well over the last 8 to 10 years. Congrats. Time to go cash in. You rode the wave for the last 8 to 10 years. That is something a lot of people can't do. Now you should reward yourself and say, okay, great. I'm going to cash in on this. I'll pay my 20% capital gains, and I'll make sure now to invest this and diversify it perhaps into some real estate, maybe some gold and silver as a safe haven with precious metals, maybe a little bit of cryptocurrency, maybe a little bit of, whatever else you can come up with from a diversification perspective beyond the US stock market and the NASDAQ and the Dow Jones and things like that. I think it's a wonderful place to be. The biggest thing to consider here, though, is that tax hit. You will pay a 20% capital gains tax on the profits. So work with a professional CPA that can sit down with you and help you figure out exactly what that comes out to. You do not want to be, in a situation where you have to get a surprise from Uncle Sam and it's like a whole thing. Maybe there's a world where you can max out some other retirement accounts to offset some of that. Just working with a professional will really help you offset some of this tax liability, but being sure to know that you will have a tax liability on this is the most important thing. And then, yeah, Robert, let's say that this person is able to diversify their money away. They still have, I think they said, let's call it $1.5-ish million in this single stock. Does that scare you? How does that make you feel?
Yeah, it's still a lot. The general rule of thumb is you should never have more than 5, 6, 7% of your net investable capital into one stock. So even at this, let's call it $1.6 million, that's still 45% of the net worth after taxes, assuming the 20% tax rate. But you also have to look at the flip side. A very important part of this is that when you're paying this tax bill and nobody wants to pay a tax bill, is that a lot of it is gains. So you have to be able to look at it from that perspective as you are giving yourself peace of mind and diversity through your gains. So that makes it a lot easier to pay this tax bill and feel good about it moving forward. So I don't like having that much in one stock. It scares me. And I think that Amit needs to really keep considering that. So maybe start with the 2 million and then migrate more over time. But I would definitely get some of that money out right away, because you don't want to be a one-trick pony and be in a bad situation if something were to go awry with that company.
You mentioning that reminds me, right? Amit said they're 52 years old. This is the time where, you said, hey, listen, I made a big bet over the last decade and it paid off for me, right? From 42 to 52, I made millions of dollars by betting on this stock. Now it's like, congrats, you're 52, your kids are going to be going to college soon. I'm sure you might be thinking about what retirement can look like in the next decade or so. It's time to take some of that crazy risk off the table, begin to diversify in the markets and different types of asset classes, and set yourself up for a wonderful retirement.